When you are.
I will call the Finance Executive Committee meeting to order. I guess, do we need to do a roll call or not? It doesn't sound like it.
Chair O'Brien?
Yeah.
Vice Chair Payne?
Here.
Treasurer Smith?
Here.
Right there where it says roll call. Next, we have the consent agenda. Would anybody like to make any changes to the consent agenda?
I would move approval of the consent agenda.
All right, we have a motion by Mr. Payne. Do we have a second?
I guess I have to second it.
Yeah, I guess so.
I will second.
All those in favor?
Aye.
Chair votes aye. Motion passes. Okay, for new business, TJPDC final policy draft. Ms. Hemrick.
Yes, so in your packet, there was a red line and a clean version of the financial management policy, which has been updated with some current practices and terminology, and then also simplifying our internal control process and our expenditure approval process. The big changes are really related to how involved I am when I go through and compare the bank reconciliation that the finance director provides to what actually happened on the bank statement. Right now, it's a very manual process and takes a while, every month. And the reconciliation can be done automatically in QuickBooks and actually is automatically taking place in QuickBooks and provided to me, and I use that to reference all of the transactions. And it's not necessary. The purpose of the internal control process is to make sure that end to end, there's no place for things that are not supposed to be taking place to happen unnoticed. And we still have that through all of our other procedures. Additionally, there are some changes to the roles that we have for various parties, including the commission chair, the Finance Executive Committee, Treasurer, Executive Director, and myself, and the Finance Director, that are outlined in the internal controls, but it's really relating to how do we operationalize these changes. And then also in the, there's a section on controls for payments that further goes into how payments would be authorized. Instead of having two signatures on a check necessarily, we might do an expenditure report that goes around for approval, still gets two signatures before the payment actually being authorized, but then we could potentially use bill pay or another method to actually make the payment and still have two sets of eyes on it.
Yep. Love it.
Are there any concerns with the way the financial management policy has been amended?
Welcome to the 21st.
Thank you.
Hopefully.
Auditron was a very interesting word to have in there.
Which one?
Auditron,
Oh, yeah.
so that's been updated.
And on the bank recon process, there still will be somebody else looking, at least looking at the bank, like reviewing the bank.
Both
right?
of us still will put
Yeah.
eyes on it.
I mean,
Yeah.
I know it previously had been, you were basically recreating the reconciliation,
Yes.
which is certainly overkill, but it is important to have somebody independent of who did the bank reconciliation to review it, so.
Yeah, and currently, our bank does not send us copies of the canceled checks, and so I have access to the bank account and can go in and pull those to look at the signature. And that will remain.
Okay, do we have a motion to approve the changes?
I will make that motion, sir.
Second. All those in favor?
Aye.
Chair votes aye. Motion passes.
Can I ask you a point of clarification? Do you want this to go before the full commission? Do you wanna make a recommendation to the commission, or do you just wanna approve the changes in this committee?
And are they
Cause the way the draft motion was written says you guys recommend to the commission, but if you feel that's not necessary, then we'll just go with what you just did.
I think we're okay. I mean,
Thank you.
These are effective for July 1.
I think you can just put in the consent agenda. Or the ones before.
I'll do that. Thank you. Appreciate that.
And this is for starting July 1 for our.
Yes, sir. Okay, well, I guess next up is the pre-audit meeting, which is why we have Mr. Foley here.
Thank you.
and Ms. Greene. I don't know who's presenting, so
That's okay.
whichever one of you wants to jump in, have at it.
You can jump.
Alright, so, so this is the pre-audit meeting, so, this is kind of kicking off, the audit process, so kind of the point of this meeting is to just, communicate, everybody gain an understanding of the services that we provide, to the commission as part of doing the audit. It's also a good time, for us just to have a, two-way dialogue to communicate, if there's any things that you guys want us to, pay special attention to, it's always good to talk about that up front, so that way we can, incorporate that into our audit procedures as necessary. So I have two documents related to the audit. One is our standard engagement letter for the audit. Purpose of this engagement letter is to confirm the understanding of the services that we're to provide the commission. So the letter talks about audit scope and objectives. And really, there's for the audit of the financial statements that we do for the commission, there's really three main pieces to that audit. One is, of course, we audit the financial statements of the commission to make sure that the financial statements are prepared in accordance with generally accepted accounting principles. The other two pieces of the audit we do in accordance with government auditing standards. One is, in addition to just looking at the financial statements themselves, as we're outperforming the audit. As part of the audit, we gain an understanding and review the internal controls that the commission has over its financial reporting. We do this for the purposes of basically determining our audit procedures and planning our audit procedures. So again, while we're out doing the field work, we, in addition to just looking at the numbers, again, we walk through the process and see how the accounting processes are working, and then, in certain cases, where we see that there's internal controls, we may test those controls to see that those are operating as they should, and then we can then rely on those controls as part of our audit testing. And then the third piece of the audit is the federal compliance piece. So anytime an organization expends more than $750,000, actually that threshold is about ready to go up to they're about ready to raise that threshold to $1 million. I think it's effective in FY 26, I think. But anyway, if you expend over 750 or in the future $1 million, then you have to, when you have your financial statements done, you have to undergo the federal compliance piece as well. So for the major federal grant programs for the commission, when we're out doing the audit, we'll test the compliance over those programs. So basically, OMB provides a compliance supplement that lists the various compliance requirements that the commission has to comply with when it's expending the federal grant programs. So we'll go through that checklist and make sure that the commission is complying with those grant requirements. So those are the three main pieces of the audit. So when we meet in November to go over the results of the audit, you'll see included in the audited financial report, there would be actually three different reports from us that communicate the results. One is our opinion on the financial statements, and then we have two other reports in the back that communicates our report over the internal controls over financial reporting, and whether we noted any significant deficiencies and material weaknesses in internal controls, and then the third report on the uniform guidance of federal compliance. So those are the three main pieces of the audit. The engagement letter talks about some general procedures related to procedures we do over the financial statements and internal control and compliance. The letter also talks about other services that we provide related to the the audit of the financial statements. And you know, some of those are financial statement preparation, so based on the audited financials of the commission, then we use those and compile the financial statements. We also, in accordance with the APA specifications, as part of the audit, they have some compliance requirements related to the Virginia retirement system. So as part of the audit, we go through that and issue our examination letter over the Virginia retirement system. And then the letter gets into talking about the responsibilities of management. Basically, your management's responsible for the preparation of the financial statements, responsible for internal controls, just a lot of boilerplate audit stuff. And then towards the end of the letter, on page 8 is the proposed fee for this year's audit.
That's a tariff adjusted?
Yes. And then we just broke out the fee between the commission audit and uniform guidance, and then the fee that we charge related to doing the cigarette tax board.
Not having last year's in front of us, how's this changed it?
It's an increase, about 8% increase.
Okay, is that standard or
Yeah.
8%
The
per
year
year?
before was 10.
Yeah, the year before was 10, so
But we had flat rate for,
yeah, it was
like
flat
8
rate
years
for,
or something.
10 years.
Which we should get back to, right?
Yeah. Well, as soon as like our costs level out, that we can, I think, get back to that, but.
So, any questions from the board here?
Is it safe to assume that since we are now streamlining, automating and pretty much modernizing our systems here, it should make the process easier, correct? What we just approved.
Not for this audit.
Big for the next one.
Yeah.
I'm trying to negotiate
Yeah.
the price down.
It makes the process for y'all easier.
yeah, those are our in-house.
Yeah. I mean, we still.
Thanks,
Yeah. Again, we still gotta look at the bank reconciliation and all that, so.
Okay. We can move on. I would try to
Yeah.
negotiate, but didn't go very well.
Yeah.
Maybe we can discuss offline, but how does the corporation fall into this, the 990 prep?
That's a good question.
That's not included in this.
Okay, so that would be
So we
something
would have to
separate
do a
contract.
separate, yeah. And what we've always, so that, the only thing we've ever done for the corporation is the 990. We typically don't do engagement letters for a 990.
Pretty simple.
But certainly we can, have a proposed, send you a quote or proposed fee for what that would be.
So I'll repropose my question. Next audit, keep that in mind.
Yeah.
So I guess, you of course have been the face that we see, but and I've kind of, looked at the proposal here, but internally, like, what happens? Do we have different auditors every year that come in? Do we have the same auditors that come in? Do we have different people reviewing the audit? So sort of, what is the internal control of, the auditor itself, right?
Right, yeah. So, we come in, it's not just me that comes in to do the audit. We have a team of usually 3, sometimes 4 people to come in, and my team, they work on various pieces of the audit. While I've been consistent as the head of the audit, the staff members that have come with me have certainly changed over the years. Certainly we've had a run where we probably had some of the same staff people for, several years, but then, we certainly have turnover
Sure.
in our business, so, like last year, I don't know if Zane had been here the year before that. Twice, okay, so Zane was here 2 years in a row, but then my audit manager that comes with me, was new to the commission last year, so.
It's interesting to watch, if you've ever seen it, you come in this room and, it's just like proverbial hats on, smoking cigarettes and just going through. That stuff's pretty cool to watch.
And our office, in our Charlottesville office, I mean, we have five different partners and, 5 different teams, so, if it ever was the case where, hey, maybe we ought to get a different person in just for a second set up, I mean, we can always.
Yeah, I don't know
rotate it out.
that, it's more of a question of practice, I mean, obviously, many of us have known you for a long time
Right.
now, but it's just sort of in the same way that you have a second set of eyes checking things such as bank reconciliations, et cetera,
Yeah.
do you guys have an internal process that says, okay, well, everything's up to snuff with this partner or not, et cetera.
Oh, yeah, and so, so in addition to just sometimes having different team members come out, every audit that we do has to go through, we have a separate quality control department. So every audit that we do has to go through quality control before we can issue the report. So we have a separate department that then will look at everything that we do. And they review the report in detail and look at, make sure we've got our procedures in place. So every audit that we do is reviewed by an independent QC department.
All right, any other questions? Well, seeing none, do we need a motion for this? No, I don't think so, right? This is just, yep. All right, so next, Jacobs, we have the TJPDC financial targets.
Yep. So we did some revisions to the presentation that was put out a week ago. The one that is printed in your packet is the revised copy, which means the recommended action is revised. So disregard that action on the agenda. You've got it up already, great. So looking at our financial targets, right now the commission's goals are set where net quick assets, the target is 5 months of average monthly operating expenses. The target for unrestricted cash on hand is 4 months of average operating expenses, and the alarm would be anytime we fall below 2 months. And then we have this goal of trying to, capture about 50,000 annually with revenue less expenses, which we're just looking at monthly to say, are we close to that? Are we above or beyond that? And that's in the financial report you guys receive every month. So that's just setting the stage. For the next one, just as a reminder for everybody, I know you guys all know this because you receive it every month, but net quick assets are the assets minus the liabilities, the current assets minus liabilities. The restricted capital reserves, which was a policy that was set by the commission several years ago, was net quick assets minus 5 months of average operating expenses. So basically, you guys were putting into reserve anything above 5 months of net quick assets into a capital reserve account. And then the average monthly operating expenses is a rolling 12-month average. So we're constantly amending what that 5-month average is based on the rolling 12-month average. Next slide. Then we get to unrestricted cash on hand, and industry best practice that we've read is somewhere between 3 to 6 months. There's other GFOA recommendations you said is 25% of your operating.
Yeah, at
Okay.
a minimum.
At a minimum.
Yeah.
All right, so the total cash is obviously all the funds that are held, checking, money market, VIP, doesn't include anything that we count as pass-through that is intended for our subrecipients. And then unrestricted cash is the total cash minus that restricted capital reserve account and minus deferred revenues that are already earmarked for particular programs. The issue is that we are reporting to you all that we are consistently below that 4-month unrestricted cash on hand while that capital reserve account is growing and growing over time. And that's just because of how we're calculating it. So that does not mean that we don't have ample amount of cash on hand. It means by policy on paper, we are restricting a large majority of that into a capital reserve account, which makes it very challenging for us to ever meet our cash on hand target because so much is being put into capital reserve. So we did just a little bit of analysis to look at it. The next slide is what we're currently doing. So that just shows you by month the calculation that we're making. So if you look at July as an example, we have 11.45 months of net quick assets. Anything above 5 is being put into that capital reserve account. So you can see that capital reserve account is a pretty healthy number to be putting aside. But what that means is when we come down and we take our cash minus our deferred revenue, we're showing that the unrestricted cash that we have is at times below the alarm level and very frequently below the target, even though we have ample cash on hand. And so what we as staff were looking at, the next slide just shows you this is the table that you receive every month in the financial dashboard. So it's showing that we're really not able to report to you that we are meeting our target because of the way that the policy is set up. So what we would like you all to talk through with us and brainstorm with us and hopefully have a recommendation for the next slide is that perhaps rather than that 5-month target, anything in excess of 5 months, we say anything in excess of 8 months goes into capital reserve. So we're lessening that capital reserve. We still want it to be healthy. We still want to be able to have the option, should we ever decide to purchase a building, we want to have that set aside reserve. But then it frees up more money into the operational cash reserve for weathering a storm, changes in federal landscape, anything that we would need more as an unrestricted cash on hand. So our recommendation is that, that's a different one. Oh, that's the old one. Our recommendation is to increase the target from 5 to 8. And then revise the capital reserves so that net quick assets above 8 go into capital reserves. And the results of that, which she'll bring up in the next slide, will show you it doesn't change our cash on hand. It just changes what is reserved into capital is smaller and what is in operational is a little bit larger. And it makes us be able to report that we are in effect having between 4 and 6 months of cash on hand at any given time.
I think those are the old slides.
It says revised.
It does.
Is the one that's printed? Yeah, the one that's printed in front of you.
Am I supposed to be able to read these numbers?
That's nice. Let me look and see if I can find it in, look in the handout version. Yeah, and we'll just zoom in. So I wonder if it, there you go. Oh, not the whole packet.
I think the printed one's accurate, 5 to 8 and
The printed one is, okay, so if you look at that, then the capital reserve account still has, you know, a healthy $500,000 in there. But then the months of operating expenses now is in that 4 to 7 actually range. So if that feels comfortable to you all, we would love for you all to either bring it to the commission on a consent agenda or have us present the same thing to them, or take action tonight to just change that target, just so that we can balance those two goals a little better.
I think that's a reasonable balance there. And I don't, you know, Keith, you've been here when it's been tough, so you have maybe a little bit more perspective in terms of what that balance means. I kind of came in just as it was getting better.
Well, I think in today's environment, more is better. So I think moving your capital out of your capital reserve, which we really don't use that often, right? And it's there to make sure that you have operational cash, which is your cash on hand, or however, I would just call it cash on hand, but unrestricted cash. So what I'm looking at, that is the correct slide, right?
Yes,
It is now.
yes.
Yeah, I mean, you know, we were 30 days from bankruptcy back in 2011, so, you know, this is pretty good, thank you. This is pretty good, yeah, I think you need more cash to work with. I'm good with it.
And you know, I think for us at the staff level, if there were ever an opportunity where we were beginning to look at real estate and we needed to use it, that would be an act of the commission to
It just moves the
determine if
money
they
back,
needed
so.
additional money to make that happen.
Sure. All right.
I think the policy should match what we're actually trying to achieve.
just out of and it makes total sense to me, just out of curiosity, is the main reason for the change just that the reporting looks more troubling than it is to the commission and in the audit, or is it that there's any actual like practical functional problem in terms of?
No, I think part of it is we don't have many levers to be able to increase our unrestricted cash on hand. So it's kind of saying we're setting the target of 4, but we can't really meet that target as long as we have this other capital reserve account. If the intent is to truly have a target of 4 months, then this change allows us to meet that goal. It allows us to actually have cash on hand that is not restricted to something on the balance sheet.
And it's also reported out in our public audit, our audited financial statements, that money is restricted. And when you look at your equity on the balance sheet,
The capital
it shows
reserves.
as capital restricted, not unrestricted.
Right.
General fund as an example, so it does
Right.
call it out, so that's a number that we're changing, or proposing to change.
Makes sense. Good to be in that position, right? Okay, so.
And I think it's also important to note that we don't use the unrestricted cash on hand except through a process of approval through the commission. So through the budget, it would be a reserve transfer even from our operating reserve. So it doesn't give us as staff any further access to use that as flex funding. It just puts it there should we need it and should the commission approve using it for a particular purpose.
Hopefully we won't, but if like we ever had to tap into the restricted fund, is it the same? That's just like a vote that goes to the commission as a whole.
Yeah, because the commission is who established it, so it's actually reported as committed funds not restricted because it's not restricted from an outside source. So because the commission was the one that set the policy, they can always make a motion to rescind it or adjust it or whatever, but.
All right, do we have a motion to make these recommendations to the full commission?
Mr. Chairman, I think the question is do we just wanna make a decision at this level, or do we wanna bring it to the body? Is that the question you're asking?
I mean, I think on something like this to go to the body myself, I mean, it's a little different than sort of the procedural aspects that you can pull out of the consent agenda if you really feel strongly about it, but I imagine this is.
I just wanted to make sure I didn't want motion, I was making.
No.
So, I'm gonna make a motion.
I'm one person, so you guys have to either, but.
That makes sense to me.
Make a motion that the finance committee recommends to the full commission for adoption and implementation effective July 1, 2025. Increase the target motion to net quick assets from 5 to 8 months of average operating expenses. Revise the restricted capital reserve calculation to be based on the net quick asset above 8 months of average monthly operating expenses.
Second.
I know, it's wordy.
You know,
All right,
read
we have a
that,
motion
you know.
by Mr. Smith, seconded by Mr. Payne, chair votes aye, motion passes unanimously. And next we have Ms. Greene over recovering the employee handbook. Updates.
Okay, I think it was the March meeting, we came in front of the commission, the full commission, and asked for a couple of modifications to benefits that we were offering. One was adding a second health insurance policy that we're offering in the next fiscal year, as well as the gym membership in increasing from $8 amount to 50% of the individual staff persons upon eligibility. And so the handbook revisions are basically just putting those policies into effect in the handbook. We would make this handbook effective for July 1st as well, so that we don't have any changes mid-year on that. So that's really what we're doing there. There were a few other just editorial changes from the last version. As an example, you can have a full-time, non-exempt employee who is paid salary or hourly. So there was a change for that correction from a prior edition. That's what's in the handbook at the moment.
So if they go 8 times, it's 50%, is that what we have?
Mhm.
Okay.
Yep.
Isn't that what you had before though?
It was a dollar amount.
Gotcha,
Not,
okay,
so when the rates were increasing, our
I got you.
share was not increasing.
Thank you for. Alright,
And
alright, any questions?
You, just curiosity, I know you already said it, but the gym membership changing from dollar amount to percentage, what was the second thing, or was that it?
The health
The
insurance.
health insurance, but basically there wasn't much to add there because we don't itemize the health insurance and what the details are with it. So instead of just health plan, it might say health plans now in the manual.
Okay.
Alright. Do we have a motion to, I guess, recommend this change to the full commission?
So moved.
Second, sir.
Motion made by Mr. Payne, seconded by Mr. Smith, chair votes aye, motion passes unanimously. How about it be adjourned? Unless there's something else,
That's all.
okay.
Nap time.
Thank you.